Okay, I know every month I give you 3 stocks that you should be looking at, but this month my advice is very simple. What you need to do is take half your money and go long Bitcoin. Then take the other half and use it as margin to short Tesla. And that's it. Do those 2 things and you'll be very rich. Okay guys, thanks for watching. Good luck to you. I'm kidding, don't do that. We're gonna do this video just like the other videos. First, we're gonna review some of our past picks so we could just, flaunt a little bit, show you how smart and amazing we are. Or who knows, our results could be terrible. I guess we'll find out. And as soon as we're done with that, we're gonna give you the new stocks for June. But first, the review. All right, so our first stock video came out April 4th, and our first pick was Micron Technology, MU. So right after we talked about it, it took some heat. But if you were able to hold on, you'd be up almost 8%. Not bad in a few months. See, the nice thing about momentum names is when it's a bull market, even when they dip, they usually resolve with the trend. So those dips are sometimes even pretty great buying opportunities. Next, we have WT Offshore, ticker symbol WTI. This was our oil play based off that oil thesis I told you guys about, which if you didn't see that video, I'll link to it above. But WTI rocketed over 100% since that first video. That stock was hot. But we saw that it quickly dropped almost 30% recently. Because that's what happens with these stocks that shoot up that fast, they fall even faster. The whole bullish narrative surrounding oil and general market positioning became too excessive. And we also saw that the stock was getting real overextended, so we expected it to pull back. And that's why we used a pretty tight trailing stop. And this is a great example of why that risk control is so important. We were able to get out on May 24th as soon as price violated our stop. But now you see prices consolidating around the 50-day moving average, which could be a good place to re-enter once sentiment resets itself a little bit. We'll continue to watch it from here. In that video, we also had Interactive Brokers, IBKR. So after that video was published, IB did travel higher, but eventually it dropped again. If you held on, you'd basically be flat. See, we don't get everything perfect. We actually exited on June 4th. It's still a great company, but we had been holding since last August, and we had almost doubled our money at this point. And after doubling your money, the opportunity wasn't as asymmetric as it once was. There were better opportunities in the market, so we exited. But there's a good chance we revisit this one in the future. Alright, now on to our May video, which was published May 8th. So Chemical Corporation, CCJ, was our uranium play, which is very volatile. It had a pretty steep drop right after we talked about it, but if you held through it, you'd be up 3%. Not much. See, that volatility is one of the reasons we just bought calls on it instead of trying to play it straight up through shares. We also had Fiat Chrysler, FCAU, which is down more than 8% since our May video. Nothing to worry about here though, it's still fundamentally a great play. But it looks like it's consolidating, so it'll be a good buy again once it breaks out. We got long-term calls on that one. And finally, we had Yatra.com, YTRA. If you remember, this is that Indian online travel company. Not much going on here since we published that video. It's still consolidating. And like I said in that video, this is a long-term hold of ours, so it may take a little while to play out. Recently, I actually did a video explaining our S-curve thesis about India that supports this play. If you haven't seen that, I'll link to it above. Check it out. Okay, now on to the picks for June. And by the way, if you like this stock analysis, then make sure you subscribe to our channel and hit that bell so you get notifications when new videos are released. We're gonna be sharing a new equity strategy that we've developed with our partners with you guys soon, so make sure you subscribe so you see that when it's released. Alright, now let's get into the stocks for this month. Now when you hear these stocks, you might think that this video is kind of a cop-out. Because every month I'm giving you all these cool stocks about stuff like uranium, Indian travel companies, Chrysler, because Chrysler is really cool. So when you hear these new names, you might think I really phoned it in for this video, but I did not. So please don't turn me off right after you hear them. I got stuff to say. Okay, so the stocks our team is looking at this month are Facebook, Google, and Amazon. Really, AK? You're recommending FANG stocks? Really? You suck. Oh, wow. I said let me explain. I know it's unoriginal and it seems obvious, but let me explain. If you've been following Fallible and Macro Ops for a while, then you know we've been looking for a melt up in the markets. And we think it's gonna come very soon because that's what happens in late stage bull markets. And if you look at history, then it tells us that growth and momentum outperform by a lot in this stage. And partially why that happens is because everyone starts to concentrate their money into the winners. And the winners are the ones with the largest earnings and with the fastest stock appreciation. All the secondary stocks kind of fall away. People stop looking at them. In this type of market, no one's really worried about value. They just want fast appreciation. And there's a herding effect too. With the way that human psychology works, everyone wants to be grouped into the same things. And that's because it feels like there's lower risk when you're investing in something that everybody else is investing in. It's emotionally satisfying to be a part of the herd and to concentrate your money with everybody else. The perceived risk is lower. So you basically get a bunch of investors just acting like cows, herding together like moo. I actually don't know if cows herd. Cantaloupes though. Cantaloupes definitely herd. So there you go. Investors are like a bunch of cantaloupes. See, the other thing about momentum is that it begets more momentum. So that means if a stock is doing well, it should continue to do well. Take a look at this chart of the momentum factor ETF compared to the S&P from the start of 2017. It's been outperforming non-stop. And like I said before, if it's outperforming, then it should continue to do so. There is still a ton of skepticism about this trend though, haters everywhere, which is great because the best trends climb that wall of worry. Just recently, speculators were holding their largest net short position against the NASDAQ since 2010. And the last 3 times net positioning was short against the index, it marked the start of a major run higher. See, everybody knows the FANGs are crushing it. Google, Amazon, Facebook, there is really no competition. But because everybody knows it, investors tend to think that it's a crowded trade and that it's played out. They think that if a trend has ran for that long, then it has to stop eventually. Because trees don't just keep growing up into space, do they? There are limits because it's not sustainable. But FANG stocks are not trees. And in this case, investors are really underestimating the network effects these companies have developed and how it's influenced their compounding and exponential growth. So yeah, scaling laws will kick in eventually, but we don't know when that's gonna happen. But what about valuations, AK? Aren't those important? You know how I feel about valuations. I made that video, remember? I'll link to it if you haven't seen it, but basically just because valuations are high doesn't mean they can't go much higher. Even the legendary investor Stanley Druckenmiller said that investors are getting the valuations of the FANG stocks all wrong. He explained that instead of looking at the earnings multiples for these companies, you need to look at their free cash flow and future earnings potential. Because these companies are purposely under earning. They're taking all that money and reinvesting it back into their business. So they keep growing their moat larger and larger. And that strategy is why we're seeing them dominate right now, and they'll likely continue to dominate in the future. And Druck isn't all talk either. His top holdings in his hedge fund are in the FANG stocks. Just think about the dominance that Google has in search and advertisement. Even Charlie Munger was saying that they have a huge moat. He said it might be even the biggest moat he's ever seen. And you know Charlie just loves moats, measuring them, swimming in them, digging them. So when it comes to moats, you could trust his analysis. And then we got Facebook, who owns almost all the world's most popular social networking platforms. What, they got Facebook itself, Instagram, WhatsApp, Facebook Messenger, and between the 4 of those, they have a combined user base that's more than half the total world's population. It's crazy. And they've barely even begun to monetize those other platforms. And you guys know from my previous videos how much I hate Facebook. I hate how controlling they are, how they manipulate everything. They're just all about a closed internet, which I really don't like. But that's just a stupid bias. Because if I want to make money, then I need to be objective and invest with the trend. And Facebook has a pretty strong trend. And I know a lot of people feel similar about Netflix. Those guys are just burning money, just producing so much content that it doesn't seem sustainable. But again, their trend is up, so suck it up and invest. Don't let your biases keep you from profiting. To play this trend, our team at Macro Ops has bought deep out of the money calls on Google, Amazon, and Facebook. And we also think that Chinese stocks like JD and Alibaba should do really well too. And by the way, if you haven't seen that video on JD that I did, I'll link to that above. Now, of course, before you do anything, make sure you're doing your own research and sticking to your own investment plan. I'm not here to tell you what to do. I'm not your father. I'm just here to help. And if you haven't already, make sure you subscribe to our channel and hit that bell for notifications of new videos. Publishing 3 a week, all market related, so you don't want to miss out. So subscribe and I'll see you in the next video. Stay fallible out there. Bye.